Welcome to Pipster. Today we're going to decode the secret language of the financial markets. We're moving way beyond simple lines on a chart to uncover the dramatic stories that price action tells us, one candle at a time. So if you've ever glanced at a stock chart, you've probably seen something just like this, right? It's this jagged line, and honestly, it can feel like total information overload. It's kind of like looking at a heart monitor. You can tell something's happening, but all the important details, they're just a blur. And this type of line chart, well, it's pretty simple. All it's doing is connecting the closing prices from one period to the next. It basically just tells you the final score of the game, but it gives you zero insight into how the game was played. You're really only getting a tiny fraction of the whole story. But what if a chart could do more? What if it could actually show you the battle between the buyers and the sellers inside that same time period? The tension, the momentum, the moments of pure indecision. Well, that is the incredible power of Japanese candlesticks. They literally turn that flat, boring line into a dynamic three-dimensional story. Okay, so let's really dive into this. To get a handle on candlesticks, it actually helps to know where they came from. Because, this isn't some newfangled invention, it's a technique that's been refined over centuries. Yeah, this technique has this really surprisingly long history. It all started way back in the 1700s with a Japanese rice merchant named Munehisa Homma. And what he figured out was that market prices weren't just about supply and demand. They were driven by human emotion. Fast forward to 1991, his methods were finally introduced to the West. And today they are the universal language for traders, no matter what they're trading. So the big question is, how can one simple little shape pack in so much information? Well, it all boils down to 4 key pieces of data. And when you put them together, they paint this amazingly complete picture of a single trading session. Okay, so for any time period you pick, and it could be a minute, an hour, a whole day, whatever, a candlestick shows you 4 crucial prices. You've got the open, the high, the low, and the close. You'll probably hear people call this the OHLC for short. Just think of these 4 points as the essential building blocks for every single candle's story. And those 4 data points, they create 2 really distinct parts. First, you've got the thick part. That's the body. That tells you about the main event, the journey from the open price to the close price. Then you have these thin lines. People call them wicks or shadows. They show you the extremes, kind of like the high score and low score of the session before the price finally settled. Now, this is the cool part. The colour of that body, it instantly tells you who won the battle for that session. If you see a green or a white candle, that means the price closed higher than it opened. The buyers, the bulls, were in charge. And if you see a red or a black candle, well, the price closed lower. The sellers, the bears, totally dominated. It's simple, it's visual, and you get it in a split second. Okay, so once you can read a single candle, it's like you've learned a letter of the alphabet. Now you can start to read the words they form on a chart. So let's look at 2 really simple but super powerful patterns that tell completely opposite stories. Alright, first up we've got the Marubosu, and its name means bald in Japanese, which honestly is the perfect description. You see, this candle has no wicks at all. None. That means the price opened at one extreme and just bulldozed its way to close at the other. One side was just in complete, absolute, uninterrupted control. So a big green Marubosu, that's showing you just intense, relentless buying pressure right from the opening bell to the close. And a red one? You guessed it, it's the exact opposite, just overwhelming selling pressure. This candle is the clearest possible statement of momentum. There is zero ambiguity here. It literally screams confidence from one side of the market. Okay, now for the polar opposite. We have the doji. This pattern looks kind of like a plus sign or a cross, and its meaning is pure indecision. It's the perfect picture of a tug of war, where neither the buyers nor the sellers could land a knockout punch by the end of the session. So let's just nail this down, because it's super important. A Marubosu signals a clear, decisive victory. A doji signals a total stalemate. Yeah, the price might have gone on a wild ride, way up and way down. That's what those long wicks show you, but ultimately it ended up right back where it started. It's like the market is just holding its breath. Okay, now for what is maybe the single most important rule when it comes to reading candlesticks. Ready? These patterns are not magic signals. I'll say it again. They are not magic. Their real meaning depends entirely on where you find them on the chart. Context is everything. The biggest mistake beginners make is they see one of these patterns and they just act on it right away. But the pros, they know to look at the context. Think about it. A doji showing up after a really long uptrend? That could be a huge clue that a reversal's coming. But that exact same doji stuck in the middle of a choppy sideways market, it could mean absolutely nothing. So you've got to train yourself to ask the right questions. Where is this pattern showing up? Is it bouncing off a key support or resistance level? Does it actually fit with the bigger overall trend? Remember, the pattern itself is just one clue. It is not the whole solution to the puzzle. Alright, let's wrap this up and see how all these individual pieces come together to tell the market's bigger story. And this quote just hits the nail on the head. It perfectly explains why traders everywhere love candlesticks. They give you this incredibly rich visual summary of market psychology. I mean, think about it. In one tiny shape, you can see strength, weakness, volatility, and indecision all in a single glance. So what you have to realize is that by learning to read these individual candles, you're not just learning some trading system. No, you're learning the fundamental language of price action itself. You've just learned the alphabet. The question now is, what stories will you start to see in the charts? That's our explainer for today.